Two AI infrastructure companies that are very popular right now in this AI era. We're going to look at CoreWeave and Nebius. Right now, both stocks are up over 120% year to date. Right now, we are experiencing a little bit of a market blip, and investors are curious. Is this a great time to buy either of these players? And it's always kind of like a versus CoreWeave versus Nebius. Now, I'm usually the type of person that likes to invest in anybody that can win. And I think both CoreWeave and Nebius can win in this AI infrastructure market. But today's episode, I want to kind of show both the strengths and weaknesses for CoreWeave and Nebius. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right. So the past few days, if you've been opening your portfolio, it's been pretty red for a lot of tech companies, some a little bit more than others. We can see CoreWeave here is down roughly 20% in the past 5 days. And like I mentioned, from its year-to-date high, the stock is down roughly 50%. Now, luckily, the Carnage we were seeing a little bit earlier this morning, kind of faded away. We saw kind of CoreWeave hit down to $85, and now the stock finished the day at roughly $91. And after hours, the stock is up to $93. Nebius, pretty much the same thing, right? Even though the past 5 days hasn't been as bad for Nebius, it is still down about 7-8% from its year-to-date high, which is closer to 70-something dollars. Now, Nebius was a little bit better. While it did go down all the way to $62, it did finish the day green, and after hours, we can see the stock is up another 1%. Now, this is why, this chart enough is why you're not supposed to time the market, and why I don't time the market, right? Imagine being a weak hand and selling at 62, 63 because you believe you can time the market and you believe there would be more volatility in the short term of things, and you want to sell off low so you can buy even lower. But 9:55 happened and everything started to turn around. So what if you sold and you haven't bought back? Now you would be buying back a lot more expensive. And that kind of emotional investing works on both ways, right? So controlling emotions is important. And I think the best way to do that is being a long-term investor. Same with CoreWeave, right? You would expect this to maybe have gone down even lower and lower. You're selling off at 85. And now look, the stock is sitting at $91. So for both these companies, they are, for those that are not familiar, both of them are AI infrastructure players. Right now in the AI market, there's not enough compute at hand, right? There's definitely not enough compute. And these companies are helping solve that solution. And both these companies tend to have a really nice partnership with my favorites, semiconductor company, Nvidia. Now, Nvidia, we can see it pretty much got down to 169 and now up to 175. So I'm not saying this is the bottom and now we're going to see a bullish case, but this is just a perfect example of why long-term investing is important, because you don't weaken out, you don't shake hands. As long as you're patient and you have a thesis in your company, the opportunity of them turning back up is still there. So let's kind of look at some of the slideshows. So I do want to kind of do a little bit of comparison between the two in forms of valuation. So right now, I'm going to be looking at forward EV sales ratio for both Nebius and CoreWeave. And for those that are not familiar, this is the enterprise value, which kind of includes the debt and cash position. So CoreWeave does have a lot of debt. So this is probably a way better way to look at these two players when looking at EV to sales ratios. And all these charts we're going to see are thanks to fiscal.ai. You do get 15% off using my code at fiscal.ai/Jose. If you are serious about investing, I 100% say get this platform. It's super cheap, in my opinion, for what you get and all the charting and everything else included. But the first thing I want to say is looking at just this forward EV to sales, and this is the next 12-month sales. Normally, CoreWeave and Nebius traded very, very similar, right? We can see this even until like mid-July is when things started to converge a little bit or diverge. We can see a major discrepancy in their valuations at the moment. Right now, Nebius is sitting at about 14.68, while CoreWeave is sitting at 7.12. Now, just on the valuation point of view right here, I do believe eventually they're going to start trading back at similar levels. Now that can happen in three ways. If for them to start trading back in similar levels, either one, Nebius pulls down, two, CoreWeave pulls up, or three, they're going to meet somewhere in the middle. And I actually think it's most likely three is usually the case where we see a little bit of pull down here and a little bit of pull up here, and we kind of see more of them converging back together. So on a valuation point, I'm going to say CoreWeave definitely looks a lot more attractive. Now let's kind of learn a little bit more about CoreWeave really quickly. So CoreWeave, what we can see here is one that's built in data centers all over the world, mainly here in the United States, but they are expanding in certain parts in Europe. They have about 33 data centers, about 470 megawatts of active power, and about 2.2 gigawatts of contracted power. So think about this as how much power they can kind of use right now. And this is kind of like their backlog of power that they need to supply throughout the long term of things, right? And you want this to continue to grow because it means they have plenty of backlog that they need to fulfill. Now, one of my favorite things about CoreWeave is they do have a really great partnership with Nvidia. If you've been watching my videos on CoreWeave since kind of a little bit after their IPO, when the stock kind of tanked back down to the 40 levels, I mentioned that NVIDIA really, really likes CoreWeave. They really put them on the top of the list, and NVIDIA really wants them to succeed, right? They don't want the market to only be the hyperscalers who are designing their own ASIC chips. This is kind of NVIDIA's way to kind of tell the big tech players, if you guys don't buy from me, I have other customers lined up, and I'm going to make sure those customers are growing as quickly as possible. On July 3rd, CoreWeave was one of the first to deploy NVIDIA's GP300 NVL72 system. Not many companies are doing that right now. So they are able to get to market a lot faster, and they get the backing of NVIDIA pretty good. Here we can kind of just see their revenue backlog in forms of actual dollar base. And we can see this is up 86% year over year versus a year ago. So they have great partnerships with companies like OpenAI, even Google, which they don't mention, but they also talk about another hyperscale contractor here, which I do believe is Google. Now, to kind of understand their contract and their revenue model, they give you a great chart. So here first, they have a contract signing with a big customer. They have an initial prepayment. The system is purchased with this kind of prepayment, and then they tend to have a multi-year partnership, either 4+ years. Now, many people might complain that CoreWeave has their GPUs depreciate almost on a 5 to 6 year basis, but CoreWeave has mentioned that this model works, and after that model, they still get even more and more monetization. They talked about the Ampere 100 or the A100 are still seeing contracts being rented out for them. So that's a product that's been out for, I believe, more than 4 years already. So it kind of showcases that this business model works. Now, in forms of revenue estimates, this company is expected to do about $12 billion in revenue this year. And we saw the market cap of this company was closer to $44 billion. So price to sales ratio is definitely pretty cheap. And then the kind of growth expected for 2026 is about $17 billion. So we see a nice growth rate here. Now, one of the biggest bearish case and biggest warnings that we see for CoreWeave is the AI infrastructure market is expensive. And we can see just in the past few quarters how this company has built their long-term debt, and there's not much cash and short-term investments really growing. I mean, we can see in the most recent quarter around $7.5 billion in long-term debt. And this is a company that unfortunately is not free cash flow positive. So they are burning cash pretty quickly. The other thing is, I mean, debt is expensive. We can see their net interest expenses continues to kind of see a heavy impact on a quarterly basis. And this just tells you a little bit that the company is leveraged. And leverage isn't necessarily the worst thing if the market is bullish and the market that they're going is really growing at these rapid levels. But just like if you think about your leverage account, if you have a leverage account and you're over leveraged in options or something, if things go bad really quickly. And that's exactly how you should think about this with this leverage account. If there is any hiccup in the AI market, those interest expenses are gonna eat up that total cash and short-term investment. Now, Nebius, CoreWeave, we do see a nice amount of insider holding. The current CEO owns about 11.7% of the market. And the reason I'm showing this, I'm not going to show this for Nebius, but the reason I'm showing here for CoreWeave is right now we did finish the lockup period for their IPO, and many were expecting a lot of insiders to sell. We haven't really seen much selling. This is now top holders, and one of their top holders is this Magnetar Capital Partners, which owned about 19.7% of the company, and they recently sold somewhere around 1.5 million shares. You might think, Jose, 1.5 million shares is a lot. That's a definite sign of insider selling. But we can see that that company owned about 95 million shares. So even if they sold 1.5 million is really not that much compared to what they hold. And as an investor, obviously you want to lock in some gains sometime. So I don't consider this IPO lockup too bad right now from what we're seeing. No one is really unloading the shares just yet, but it is something that it should be kept an eye out. Now we're going to look into Nebius, but if you are enjoying the episode so far, make sure to hit the thumbs up and the subscribe button. I'm trying to hit 75,000 by the end of the year. I think that goal is easily going to be met. I'm actually going to shift. Can we hit 75,000 subs by the end of this month, right? August 29th is actually my 33rd birthday. So maybe we can get me my birthday gift would be awesome if we could get 75,000 subs. So that would be great. Now, Nebius, very similar market, right? They do have massive data centers, mainly in Europe, but they are expanding here into the United States. They have about 220 megawatts of connected power, and they have about 1 gigawatt of contracted power, a little bit more than that. They are expanding in, like I mentioned, the United States, in New Jersey, in Finland, expansion, all expected either in the calendar year end of 2025 or calendar year end of 2026. Now, pretty interesting that they have some in Iceland and Finland, right? I'm pretty sure those data centers are going to run pretty cool. Now, in terms of their most recent earnings, they're seeing a lot of revenue growth. I mean, we can see group revenue was up 106% quarter over quarter and 625% year over year. They do have a nice amount of cash, and they're not as leveraged as we're going to see as CoreWeave just yet. And that's something to kind of consider. One of my favorite things about Nebius is they're more than just an AI infrastructure player, and they do more than just pure bare metal. They do kind of have like an AI solution that they stack on top of their renting out, which does give them a little bit more margins, or technically more margins than CoreWeave, because they have like an added software solutions. It's not just a bare metal rental. And for those that are not familiar with bare metal rental, it's exactly what it means. It's like you're just renting out GPUs. Nebius, on the other hand, is not just renting out the GPUs, you're renting out GPUs and some form of software or AI's management tool on top of it, which is obviously an add-on. Now, CoreWeave is trying to also do that, but I'm going to say with most of their customers being like OpenAI, your Google Cloud, all they really want at the end of the day is those GPUs, bare metal, and nothing on top of it. Now, with Nebius, like I mentioned, they have that added AI solutions, but they also have other things like AV Ride, which is kind of their autonomous vehicle market, which is expanding globally as well. And they do have some great equity investments in a lot of AI companies like ClickHouse and Toloka, all which are kind of focusing in the AI market and could definitely be multi-baggers within themselves. Now, within Nebius ecosystem, they are also a great partner of Nvidia. Now, if there was a favorite, right? Let's say if both of these were Nvidia's kids, who would be the favorite kid? I would say easily CoreWeave, but Nebius does get some love from Nvidia as well, right? And Nebius is among the first AI clouds to offer the new Blackwell Ultra AI Factory platform. We saw CoreWeave was the one to do it first, right? So they're both pretty good at putting up systems pretty quickly. But if I was to pick who was the favorite from Nvidia, I do believe it is CoreWeave. Now, if we look at this is kind of their balance sheet, total cash and short-term investments and long-term debt. For the longest, one of the biggest bullish case for CoreWeave, for Nebius, was this was not a leverage company. Remember, let's kind of just pull back here to CoreWeave. CoreWeave, we can see a little bit of cash, a lot of debt. And many investors were saying that that's why Nebius is a better story. I think that story is going to change pretty quickly. While right now, obviously, Nebius has better balance sheet, I don't think that's always going to be the case. I think as this company continues to invest dramatically in this AI market, and if they want to grow a lot of market share, we're going to see that long-term debt increase a nice amount and be a bigger portion than cash and short-term investments. Now, I wonder how the bulls will react to that, but this is something that I would expect to happen within the next few quarters. Now, I think this is a really great explanation of both these players, some of the risk and some of the growth opportunities. Obviously, the AI market, if you really need all this compute, both of these can do really, really well. But if the compute dies down for any needs, both of these are going to be in a bit of a poop show, to say the least, right? That's definitely where they're going to be, because it definitely could impact the pricing of that compute, the demand of that, and they will have a lot of products that's not being rented out. At the moment, though, there doesn't seem to be a slowdown in the AI space. Now, I do like both a lot. If I was to pick one over the other right now, I think it would be CoreWeave based on the valuation at the moment. And this is now a stock that's sitting at a market cap of about $44 billion. Nebius about 16 billion. A lot of growth opportunity here. I would buy both. If I had to only choose one right now, it would be CoreWeave, but Nebius is right there with it. If maybe Nebius gives us a little bit more of a pullback, the story might change a little bit. But I do believe this chart tells us a little bit of which one is a little bit undervalued at the moment. So if I had to do kind of like low dollar cost average, I would do low dollar cost average on Nebius and maybe kind of normal to medium dollar cost average on CoreWeave. I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.